My name is Jake. Welcome to the channel. I want to talk about what most dividend investors get wrong. I've been investing for a handful of years and I've made a lot of mistakes. This is not something that I really learned about in school. I took accounting courses in college, took finance courses, but I didn't really learn about how to invest. I didn't learn about different asset classes. Most of the stuff that I learned was through trial and error, learning by doing. And I made a lot of mistakes along the way. And I want to share with you some of those mistakes that I've made and hopefully help you so that you don't have to make the same mistakes that I made. So if you're just new to the channel, my name is Jake once again, and I created this YouTube channel to help new and beginner investors learn about dividend investing, to really make it so that it's not complicated, that it's not intimidating, and that just your average person can do this. My wife and I, we reached barista fire at the age of 37 here this year. So what that means is we're no longer working our 9-to-5 jobs, but rather we're living off of our dividend portfolio, the income from our portfolio, while also working part-time on the side to supplement the gap in income. That's why it's called barista fire. So to start this off, I want you to think about this for just a second and I want you to follow along. What does MPW, so MPW is Medical Property Trust, what does MPW have in common with Intel as well as Lumen Technologies? This is a pretty big company. They acquired CenturyLink a few years back. What do all these companies have in common with Kraft Heinz Company and Wells Fargo? These are all pretty big companies. Well, the thing that they have all in common is that here in the last couple of years, they've all cut their dividend. They've all cut their dividend, and in some cases more than others. In the case of Wells Fargo, they've cut their dividend multiple times over the last couple of years since the financial crisis. If you look at Kraft Heinz, this company here cut its dividend here in 2019, and they've not recovered since then. They've not increased their dividend since the cut. When it comes to Lumen Technologies no longer pays a dividend. They used to pay a dividend, and that dividend was not the most reliable when it comes to its payout. And then when you look at Intel as well recently cut its dividend. Intel has been paying a dividend for years, decades, but they recently cut their dividend. And then as well, MPW has recently cut its dividend. MPW, this one was a pretty big, it was a shocker and kind of not a shock considering, what's been going on with the stock price. This has been a pretty big popular one here lately. So all of these companies, what they have in common is they've all cut their dividend. And when you take the example of MPW was paying a consistent dividend and a growing dividend since the financial crisis of 08 and 09. And they've done very, very well up until recently. And if you were to ask me 2 years ago, would MPW cut their dividend? I would have said absolutely not. There's no way. But I don't have a crystal ball and neither do you. And that's just part of investing. That's the risk that comes with investing into individual stocks. Just looking at an example of MPW, if you look at some of the articles, you got one that's a strong buy, one's a strong sell. I mean, how is a new investor supposed to navigate through all of this noise? I mean, honestly, this is so confusing. If you're investing into individual stocks, that's the risk that you take. And it's important that you are disciplined when you're investing in a well-diversified portfolio, that you don't go all in on a single stock. Not even a couple of months ago, YouTubers were talking about how MPW was a great buy at, the dividend yield was like 15% and everybody's going to be rich, and don't believe the naysayers, don't believe, be greedy when others are afraid and be afraid when others are greedy. Well, I can tell you what, all those people that were greedy, they probably thought that they were going to get rich, and the expectation probably looked a little like this.
Hallelujah. Wax. Thought this shit was all with.
I just lost $500,000. Hard loss, but I can't say what's gonna happen anyways. It's okay, guys. We'll recover from this someday.
I am never gonna financially recover from this.
Oh my gosh. Oh man, the reality. Well, I'm laughing, but I really shouldn't be laughing. I'm losing my butt in MPW. I think I'm down like 60%, but I'll get to that example here in a second. So we're talking about what dividend investors don't understand. Okay. So I'm kind of follow me with this. I'm going to make the point make sense here in just a second, okay? So when you think about it, Kraft Heinz, they cut their dividend back here. I think it was in 2019, early January 2019. They have not really financially recovered from that dividend cut, right? So about 4 years later, almost 4 years later, and their stock price is flat. Yes, you've gotten the 4.5% dividend, okay, but the stock price has been flat. Now you look at Lumen Technologies, this one is a bit scarier, right? You think back, I think it was in March of 2019 is when they cut their dividend right around here. It's down 86%. So Lumen Technologies has not yet recovered, does not look very good for them, but they've not recovered, right? So when you look at, for example, Medical Property Trust, it's too soon to say, but since the dividend cut, they're down about 8%. Okay. And I mean, MPW has been in a drawdown for the last year. So it is what it is. But one example that I want to make is when a dividend does get cut, it doesn't always mean that there's doom and gloom. In most cases it does, but not always. You look at the example of Intel. Intel cut its dividend in February of this year. And what's happened since then? Well, they've gone up 53% since the dividend cut. So it's not a guarantee that the share price will not recover, but the odds are against them in terms of the companies that actually manage on turning it around. And time will tell how Intel recovers from this dividend cut, because they cut their dividend by 65%. Okay, so we'll just have to wait and see. But the reason why I'm showing you this is when dividend investors, when you invest into an individual company and the company cuts its dividend, what does that mean? Well, it means that the share price, in more cases than not, there is an exception, i.e. Intel, that the share price is probably going to go down. And the dividend is probably not going to recover overnight. So let's take a look at a few examples here really quick, and then I'm going to make my final point here about what people usually don't understand. So when the dividend gets cut, for example, it usually doesn't recover for a couple of years. This is Wells Fargo here recently when they cut their dividend. When you look at Kraft Heinz, they cut their dividend in 2019, and that dividend has not recovered since. It's not gone down, but it is not recovered. When you look at Lumen Technologies, this is like the nightmare scenario where they cut their dividend in more than half and then they suspended it entirely. Okay, this is the nightmare scenario. Intel, it's too really early to say, but they slashed their dividend, and we'll just have to wait and see what happens with them. And the same goes with MPW. What's going to happen with MPW? Okay, now let me get to the point where the main point that I want to make in this video is when a dividend gets cut, this is what a lot of dividend investors don't understand. So when you look at the dividend of MPW, let me show you this here really quick. So when you look at the dividend of MPW, before the dividend cut, it was yielding about 16.5%. And it's like, okay, 16.5%. Okay, if they cut it in half, that's okay. I'm going to go from a 17, 18% dividend to, 50% less. Okay, whatever, that's not a big deal. But there's more to that than just that, okay? That's not the whole picture, okay? So when you look at it, the forward dividend yield is 9%. So you might be thinking, okay, I have 100 shares of MPW, the dividend just got cut, okay, I'm not yielding 16.5% anymore, okay, I'm yielding 9%. Well, hold on a second, that's actually not the case. You're not yielding 9% unless you just barely bought it. If you've been holding this company for years and you have a higher cost basis, you're actually yielding much lower than 9%. So you're thinking, okay, they just cut their dividend 50%. It went from 16, 17% down to 9%. And you're thinking, okay, 9%, that's cool. Well, you're only getting the 9% on the current share price at the current rate. So if you're reinvesting the dividends and you're buying in now, well, yeah, you're getting a forward dividend yield of 9%. So you might be thinking, okay, well, I kind of follow you, Jake, but not entirely. Well, let me show you a real example with my own portfolio here in M1 Finance. So I have two portfolios. I have the cash flow portfolio and I have the real estate portfolio here. And these are my holdings in my real estate portfolio. As you can see, I'm absolutely getting destroyed like everyone else because REITs are not not in favor. But I actually think REITs are going to have a rebound here next year. So I'm holding on. But anyways, let me show you a real life example of what that's like. I'm not yielding 9% just because they cut it, the dividend by 50%. Let me show you the reality. I'm down, oh, look at that. I'm down 64%. Oh man, you can't see the tears, but they're definitely, they're there. So I have just about 1,050 shares of MPW. And I want to walk you through a few things, and I'm kind of old school, so I'm going to use my little calculator over here, and hopefully you can follow along with me, okay? So let me pull up another calculator. I'm not like those fancy YouTubers that have editors that they pay to edit their videos. I do it all myself, and so we're going to do it old school here with little fancy calculators, okay? So that's where we're at. Okay, so anyways, really quick here, so that you can follow along, let's go back to MPW really quick. You can see here that the dividend with MPW, before the dividend cut, for every share that you owned, you were getting 29 cents. After the dividend cut, for every share that you own, you're getting a 15-cent dividend. Okay, very, very important. Before the cut, after the cut. Okay, so now let's use my real life example of what it was like for me. So before, up at the top left here, I had 1049.64. So this is how many shares that I had times 29. Every 3 months, I was getting $304 in a dividend. And then you times that by 4 annually. Annually, I was getting $1,217. So over here on the left, before the cut, I was getting over $1,200 a year in dividend income. Now on the top right, we have 1049.64 times 0.15, because this is with the dividend cut. Now I'm getting $157 every quarter times 4, because there's 4 quarters. I'm now getting $630 a year in dividend income. Now, this is assuming that I'm not reinvesting the dividends and I'm not adding additional capital, okay? So I'm just talking about me, right? Because before it said the forward dividend yield was 9%, okay? So before, so if we take this, we take my 1,217.58 right here on the bottom left, and this is the amount of dividend income that I'm getting, and I divide that by my cost basis of 8,573. That means my yield on cost was 6.5%, 6.6%. Okay. So before the dividend cut, because my cost basis is $17.69, right? I have a 6.5% dividend yield. Now with the dividend cut, that looks a little bit different. So then what we got to do is we got to take the 629.78, divide that by the 18,573, that means I'm getting just over a 3% dividend yield on my investment. Now, this is where a lot of people get confused. They're thinking, well, Jake, you're not getting 3%. The stock is yielding 9%. Remember, we saw that on Seeking Alpha, right? Remember, we saw that right here with the dividend score. The forward dividend yield is 9%. Well, yeah, it's 9% if I were to buy it at today's price of $6. Do you understand? My cost basis is over $17. So I'm not getting a 9% dividend yield. I'm getting just over a 3% yield. And that's what so many dividend investors do not understand. They think, okay, well, the dividend got cut. I guess I'm just getting a 9% dividend yield. No, it doesn't work that way. You have to base it off of your cost basis. And if you're retired and no longer reinvesting your dividends, this is detrimental to your income. I'm getting 50% less income on my initial investment of over $18,000. And that's what so many dividend investors don't understand. When your dividend gets cut, it could take years to recover, if at all. And it's very, very important that you understand that. And that's why I talk so much about how to invest based off of your time horizon and how to invest conservatively with not investing more than 5% in an individual stock. Imagine I had the majority of my net worth in MPW. I'd be SOL right now. But because I follow my own guidelines and don't invest more than 5%, I'm okay. it's really, really important that you understand that when the facts change, it's okay to change your mind. Back in 2021, when I was investing into MPW, everything looked great. But today, it looks entirely different. And if I were to decide to sell my position in MPW, which I have not yet definitively decided, I'm leaning more towards selling it. I've not decided yet, though. It's okay for me to change my mind because the facts have changed. And it's important to understand if the facts change, you're okay to change your mind. Thanks so much for watching, everybody. I hope that this video was helpful. I hope that you learned something new. If you want to learn more about guidelines to investing and how I personally view this as a dividend investor, you can check out this video here that will pop up on the screen here in just a moment, and you can check out that video. Thanks for watching, everybody. I'll see everyone in next week's video.
Please subscribe. Please subscribe.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.